Welcome to TradeTheMBI.com. This is John's report is for the 21st of July, where we reached that 50% Fibonacci. As expected, we got a little bit of pullback once we reached it, and here we see now we've got MBI white squirting here right over the magenta. Magenta hasn't faded yet. Of course, this is the current day, but interesting that we're right at the conjunction of the DOC of green and which midterm buyers versus cyan. So right at the point where we get an inflection, you're either going to get the crossover, which will propel us well over the 50%, and then I would expect to move towards the 100. But a failure here, we're likely to see more sideways action until we get the pivot of magenta below the yellow MBI there, which would signal the potential for a move lower. Now, what's critical about that is when we're at the shakeout level at this, where we've gone from negative to positive, the expectation is that if you turn around and go negative again, you're going to revisit the 0% line. So this kind of becomes a very significant point in the market at this particular stage, because there's been a progressive build here with, like some people would call that a triple bottom, not per se, actually, but it's been a progressive build in the DOC and kind of interrupted a little bit. You know, we look for continuation progression, but we're higher than we have been with the red DOC and any of these other previous dip formations with the turnarounds of MBI. So now that we've had gold running for a while, any turn down here would cause that to begin to fade again and definitely create a significant weakness. So it's kind of a critical key, very easy, because at this particular stage you get the 50% right there at 39.71. So clearly above that is going to be long strength, but as long as it continues to be resistance, it really becomes a question of the intraday charts and seeing where we get kind of a drop flow. The big difference is the NASDAQ well above the 50%, so you can see the divergence in performance clearly, as well as much stronger MBI readings, and you already have the green over cyan. So from a NASDAQ standpoint, it looks like we're continuing to head towards that, and that could be enough to propel the S&P. Of course, you know, we were talking about on the Skype chat the other day, the Italian government on the verge of collapse right now, and that's puts a lot of pressure on the ECB, because they were coming out trying to support the euro by saying, oh, we're going to raise rates 50 basis points kind of move. Has been the quiet talk, but that's pretty tough to do. At the same time, the Italian government may be in major transition, and no one knows when it would be resolved, and we've already seen the Italian bonds skyrocket, so that puts pressure on the ECB to have to buy those bonds, and is at the time, you know, when they're introducing their new facilities to throw that in there. And, you know, you couple that with what's going on in Germany and everything else, there's just a lot of issues in the Eurozone area, and that's been reflective of this significant decline, you know, from the mid 120s, you know, going back, and then even this year, you know, from the early part of the year at the 113 plus range, dipping all the way back down to subpar has been quite a move, and it certainly has an impact on earnings in the West. Here we have gold continuing its decline. Nothing about it at this particular stage is presenting the turnaround point, but again, we've also talked about that divergence, and this is that idea that, you know, deflation is more likely to hit us in the near term, meaning 5-6 months, than inflation at that point. So that could be terribly wrong, in which case I think you would see a very strong rebound in gold. But for now, it's still in that sell mode. And oil, 94, so not getting back over that 100, and if that remains the case, certainly going to mean a rate of inflation increase drop dramatically, which could present more stabilization, and instead of prices exponentially rising, you would just have them where they are or slight increase from where they are. So the damage is going to be done, but it's not progressively getting worse. And so that becomes helpful from that standpoint. Doesn't mean that it's going to change the economic outlook, but the Fed may see it as having a significant impact and may not have to do what it's talking about doing, which I think would be excessive if they did another 3/4, even though that's what they've indicated. I think anything less than that, though, and in the market would certainly take off to the upside significantly. And there could be some doubt in that, too, because treasuries really have not shown increase yield yet, even though everyone has been told that there should be another 3/4 point rise. TLT in this case should be hitting much lower, and it hasn't been. From a Bitcoin standpoint, there was a nice continuation of that move all the way back up to that 24, which from the daily we were talking about got us to the 23%, and then a little fade off here from that 23% mark. And ETH likewise had a pretty decent move the other day, but it's faded just a little bit below that 1600 level. But all in all, they've done pretty well, and you can see there was the lift off, and we're just pretty much trading a little sideways here until there's a resolution. This looks a little soft from a 50K, so this could be the beginning of a little bit of weakness period. And of course, becomes pretty straightforward. That's 76% of 39.40. Below there is clearly going to be a move that's going to take you back down to 38.98 range, 50% mark. Intraday, you can see that we started off with the decline, and we hit right before the morning, and things shot up. And I thought I'd point this little square out that I indicated, because oftentimes you'll see me mark the crossover dip where we have magenta dropping below MBI yellow, and particularly if MBI yellow is 33 level or below. The difference being here between this one and this section here being much stronger. At DOC, you can see the huge difference with cyan under red, which is always in the buy. Yes, you're in the overbought area, but often these dips aren't significant. I still allow it on the paint bar because, it's still worthy of 8+ points or more from a dip. So intraday, on the regular ES, that, can be as much as $400 a contract. So it's not something that I avoid. It's one of those where I would recognize that it's likely to be short-lived, and as soon as you get that transition, you're going to have to either flip to be neutral or prepare to push back to the long on those setups. But definitely huge difference comparative to here, where you just get the DOC spread that takes place in the following bar there, and that leads to much more significant fill of, the positive extremes that we had marked, which was that 39.49. Did it quite effectively, and so I just thought I'd point out, even though it's there and you get the turnaround, some would prefer that it just all stays green, but I think it's relevant and important to be able to note when you're going to have that softness, and the likelihood that because of the DOC cyan being under red, that you're likely to get some move, but that it's usually the one that's a turnaround in that particular case. And then later on, when we have the lower shakeout on higher highs like we do here, that's when you can get a much stronger breakdown. And it's in fact what happened, and then it's series cycled for a few before finally turning around with the DOC green, full reset with the orange dip low, and some nice runs towards the end of it, until things got a little confused there at the end. Some people, just accepted the early part of the news from the Italian situation, and some were debating whether or not it will be all that significant and or how soon it will actually happen. Yes, there's, just talk. It hasn't actually occurred. So probably see more of a negative reaction if it actually ends up breaking down and having the Italian government separated. Would definitely put pressure on a lot of different areas. So we'll see how it ends up playing out. Politics always has an impact in markets. And nowadays it seems that, global impact is certainly a factor. As always, though, I'll continue to update you on the Skype chat. Trade well. We'll talk to you later.